Richard Clarida speaking. And one of the Fed's sort of, what do you want to call it, road shows is trying to do on figuring out what to do with its monetary policy and how to change it. Says the U.S. economy is operating close to maximum employment and close to its price stability goals, but that the global neutral rates, that's both here in the United States and abroad, have fallen, and this is likely to persist for years. Those lower neutral rates means the Fed is more likely to be at the zero lower bound, and it makes it harder for the Fed to help the economy. He doesn't talk about trade, but overall, these are kind of the dovish remarks that Clarida has been making. Meanwhile, Neil Kashkari, Minneapolis Fed president, this morning says he's in a wait-and-see mode on the trade effects, as it could go either way, possibly lead to cuts, possibly to hikes. But ultimately, guys, I'm sure you've seen the reports that have been out. Many of the Wall Street houses are out there saying, you know what, this is probably, if it goes on the way it's going, leads to the decline in growth they expect, that lead the Fed to cut rates. Morgan Stanley saying as much as perhaps 50 basis points if this goes on for 3 or 4 more months like this. Carl?
Steve, we've talked a lot about potential for slower growth in the face of tariffs. Today, Goldman comes out and says we haven't seen a drop in pricing from Chinese exporters, and hence their view is, I think, net hawkish on inflation as a result of this trade war. Is that consensus right now? No. Economists are trying to figure out which way this breaks. It's very, very difficult. I'll give you an example. The washing machine tariffs were passed along full to the consumer. But also, for no particular reason, dryer prices went up along with it because they could. So, yes, that part is net hawkish. But if ultimately you have what's considered to be a one-time rise in the price level because of the tariffs, that's the year-over-year would go up. But the rate of inflation, say, in subsequent months would not go up anymore unless you have a change in inflationary psychology. There's a lot to game out here, Carl, for people on the street and investors, like the political probabilities of a deal or no deal. Is it just the 200? Is it 325? Does it move on to auto tariffs? And then trying to figure out what the economic impact is makes it hard enough, with a big concern about how do equity markets react, because that has a big economic fallout as well.